you could be back in a situation with rates too low where you have 10 offers on every home and people are paying 20,000 over ask, waiving inspections. That creates a whole nother scenario of problems. But right now, I think where we're headed, we're trending lower. We're in my experience with government loans, VA and FHA, we're starting to see rates in the fives again, which is nice. Conforming conventional loans,
Low
um,
sixes, low to mid
yeah,
now.
I've been seeing a lot of mid six, six and a
Yeah.
quarter, 6 to 6.49, depending on points. I
Yeah.
don't typically promote points. I'm of the school of thought that you should, in a rate market that's reducing, you should not pay points. You should take the standard rate and look for a refinance opportunity within 12 months.
Well,
Um,
and that's another thing. I came from a no closing cost shop. When I first started in this industry, I did no closing cost. And now that the market has improved a little bit, spreads, mortgage spreads, the spread between, the federal funds rate and what a 30-year mortgage rate, that has gotten better. And now the ability to even contribute to someone's closing cost is a little bit easier than it was in the last couple of years because of how high those rates actually went. So I'm actually hoping that, people will reach out to, their mortgage professional and talk to them, because one of the worst things that you can do, let's say that, you've been waiting for the rates to come down for 2 years. You want to refinance, but you don't think about the fact that in 12 months you're planning on taking another job offer somewhere else, or you have to sell that home because something is changing. If you're not going to break even on the money and you're going to make six payments and then pay the loan off, that's not the smartest thing to do. I actually had a couple of times where that happened, where I refinanced people in 2020 and 2021, and they were amazed at how much their house appraised for. So two of them never even made the first payment on the refinance, even though they paid to buy the rate down. They paid, I mean, all this
what
money
do they
on
sell?
how they sold. Yeah, they saw how much the appraisal came in at, and they were like, "Dude, we got to take our money and run." So,
Sorry,
there's different
I got
ways
a
to.
mosquito getting me.
Oh no, you still have mosquitoes down there.
Yeah,
Up here they froze to death.
not too many, but it's been getting cold in the morning, but warms up during the day. And I don't see too many, but there's one definitely biting at me right now.
Right. So, I mean, I'm just saying, like, basically, I think that rates need to come down for refinances. People who've been sitting in the sevens, and, they need some relief. We're not really seeing enough for some of my clients to jump. And I mean, I've got some clients that want to wait for 3%. I mean, I hope it comes eventually.
Well, 3% is never coming back, in my opinion.
Okay.
I will die on that hill. I think maybe government
Four.
loans might get into the mid to high fours, and conventional loans low fives. You might see high fours again, but I don't think we're going to see rates that low. I think rates in the fours and fives are definitely fair and reasonable.
Yeah.
Sixes and sevens are a little high. The bank is getting a little too much, but that all comes back to the Federal Reserve, which essentially creates this drama and creates the pathway for where mortgage interest rates are going to be.